Good morning. My name is Yutisha Pawar, and I'm the business consultant of AIT Global India. Welcome to our webinar series on Leadership Summit 2021. While the success of leaders is often conveyed by their actions, incredible insight can be gained from their words. Here we are with amazing leaders around the globe on a single platform. 2020 has brought a unique set of unprecedented sets of challenges for countries and businesses globally. All of us has been adjusting to COVID world. We have overcome so many challenges due to lots of uncertainties. We have also seen lots of interesting things going on. Due to pandemic, we all have moved to new normal, and AIT wants to bring industry leaders on single platform and have a virtual session to connect with our audience to discuss leadership challenges and digital transformation that has impacted the entire world. We are bringing leaders from different domains, different geographical locations. Next 3 days will be meeting different thought leaders who are from digital banking, fintech, investors, from Cyberdome, IPS, assistant directors, cloud evangelists, agile practitioners from real estate, and also digital transformer who has seen the change in last 30 years. I'm really excited to kickstart this leadership summit and would like to thank our audience to be part of our session. And please share your questions at the end of our session. On our first session, we have with us Greg Kresnov, founder and CEO of Tonic Bank, which is the first neobank in Philippines. Greg has been part of multiple other fintech companies and consumer bank in Europe, that is Platinum Bank. Welcome, Greg.
Thank you, Tisha. Thanks for having me on.
We also have Mr. Munywoki with us, founder and CEO of Goodson Capital Partners. Mr. Munywoki is an expert in African financial markets. GCP is a uniquely African investment firm present in several sub-Saharan African countries with the head office located in Johannesburg. Japheth has expertise in African asset management, corporate finance, capital market, research, capital raising, and strategy consulting. Am I missing something, Japheth?
No, you're not missing anything. It's already glowing as a profile. Thank you so much, Yutisha.
Thank you, Mr. Munywoki. Over the past decade, traditional financial institutions have encountered new challenges, what had been a relatively stable marketplace. These new entrants, referred to as neobanks, offer consumers free accounts to deposit their money, collect higher interest than from typical banks, and perform other assorted bank functions through their smartphones. No physical bank locations required or even available. To understand the appeal of these neobanks, as well as the challenges, we have Greg Kresnov with us. First of all, congratulations, Greg, for Tonic, as it is the first neobank in Philippines. And I think you are recently recognized as Asian FinTech Director of the Year and top 12 FinTech leaders in Singapore.
Thank you very much, Yutisha. Yes, those are nice accolades, but like at the end of the day, it's down to what value you create for the customers and the investors, and that's really what we're focused on. But thanks for the recognition.
No, it must be amazing, especially when people recognize the effort that you have put in so many years. I'm pretty sure like people have learned a lot, and it's truly deserved.
Thank you very much.
Okay, Greg, financial institutions has been to a lot of digital disruptions. Neobanks are pushing innovative technologies, including machine learning, artificial intelligence, blockchain, and sophisticated APIs. What are the major themes within neobank space?
Neobanks basically have evolved under a few different business models. And in the developed markets, what we've seen is neobanks going in through payments, current account and payments as being the dominant business model. Some people have tried to copy that business model into the emerging markets. In my mind, that doesn't translate very well because the penetration of digital payments is not nearly as high in the emerging markets as it is in the developed markets. So monetizing on the payments is difficult, because the total payments revenue stream in the market is typically an order of magnitude lower than that in consumer lending. So the more successful neobanks in emerging markets, like Nubank in Brazil or Tinkoff in Russia, they focused on consumer lending.
Mhm.
And that's really the business model that we're pursuing as well. My personal history is I'm a consumer lender by background. I think first decade of my career, I was on the same side of the table as Japheth. I was a private equity investor, but then I kind of went entrepreneurial, and my whole career was in and around consumer lending. And that's really what Tonic is all about. We're focused on consumer lending as our main we're credit-led neobank. We started out in March this year with our MVP, which was savings. Was not credit. But the reason for that is that savings are the raw material for credit. So before you can go out and start lending, you need to know how much of that raw material do you have, because that will dictate the speed at which you go on the asset side of the balance sheet, and that also dictates your product strategy, which products and channels you open on the asset side of the balance sheet. So, we've seen tremendous traction with our savings product. We're now at over $70 million of retail deposits already, and we haven't really done any marketing yet. Clearly the customer out there is interested in what we have to offer. We're launching our credit products in 2 weeks. So very, very exciting time for us, kind of some last minute jitters there. But we know that Philippines is by far the most undercredited consumer market in all of Southeast Asia. That financial inclusion aspect really drives us and makes it very, very exciting for us to go and do what we've set out to do.
Thank you, Greg. Coming back to you have mentioned that emerging market has more potential for neobanks. When I was going through a couple of studies where Europe has more neobanks comparatively in numbers, they are like, according to, I think, Forbes, there are 256 neobanks worldwide, and Europe has more numbers comparatively. So next 3 to 5 years will be crucial for growth and adoption, I believe. Worldwide, there is a Bloomberg report that says that the whole neobank economy could pass $720 billion by 2028. So what's the outlook for just Philly? You have explained it very nicely, but what do you think the key drivers that favors that growth apart from consumer, because they are restrained about the broadband connectivity? We are seeing only 53% of the people have that coverage when it comes to broadband or the cellular or mobile access. So what's the key drivers that are favoring the growth, and what's the outlook of the growth in Philippines and Southeast Asia?
That's a great question, Itisha. Thanks for that. Look, it's I can start with a story, which is like 10 years ago. I was maybe a little more than 10. I was browsing through The Economist magazine, and they had this really cool chart that showed top 10 languages in the world in terms of number of people who speak them. And it just blows your mind that like 3 of the top 10 are actually in India, and very few people outside of India have heard of the fact that it's a thing. That it's a language, right? So that just kind of, if you think about where the people are in this world, population, right? Population is in the emerging markets by far. And within that population, technology is a massive equalizer and decolonizer, the ultimate decolonizer and equalizer. So we've seen China basically go through what they're going, and now going for the #1 position globally. Not many people like outside of China realize they're already #1 on technology. Like they bypassed US probably 5 years ago. That technology is creating all this value in the emerging markets populations that needs to be monetized. And getting the population the services that they need in terms of financial aspect of it, the lending, the savings, the payments, the wealth management, all of those things. When you have wealth going up, when you have incomes going up, people need those services. And nobody ever wakes up these days and goes, hey, maybe I should go to a bank branch today. Wouldn't that be a great way to spend half of my day? Like that's just not something that people do, right? Nobody really ever wants to go to a bank branch.
Yeah.
Gates said very famously at some point, also like more than a decade ago, everybody needs banking, nobody needs banks. right? So that's basically what we have with neobanking, right? It's the emerging markets population, which is very young, very digitally native, very hungry for all these services, and then also very not keen to be wasting their time on going to a traditional branch and want to do that on their phone, want to do that right now. They want to onboard in 2 minutes based on a selfie, and they don't want to like have to talk to anybody unless they have to. So I think, the traditional banks that don't fully embrace that are just going to be out of business. Like traditional incumbents, like, anybody holding stock positions in the financial sector, unless, you're holding something and guys that are super deep into transformation, it's a short sell, like over the next decade.
That makes sense, because I was going through the report, like most of the companies, when we are talking about Morgan Stanley, JP Morgan, or big banks, they have started their digital transformation journey in especially after pandemic. They have realized the importance of neobanks or digital banking, and it becomes more customer centric, what's comfortable for them, how we are reaching to the customers. So that makes perfect sense what you have said. Mr. Munywoki, I like to know your views also, since you are an investor, and definitely you have come up with multiple projects from this digital banking point of view. What are your thoughts on this?
My thoughts are, I agree with Greg that we basically need to go short on anything brick and mortar at the moment. My question to Greg is around two things. One, this is basically industry-wide in terms of neobanks, which is basically the cost of digital security. Because essentially what will happen is, once we get away with your brick and mortar, then we have new challenges, which is, how safe is my money in a digital bank environment? So that's question number one. But question number two is, I love his strategy around a savings MVP product in terms of their strategy. It's novel. But the challenge there is, if you start with a savings product, then essentially you're going to struggle with you being able to manage your returns on that. Remember, if I do savings, I'm basically expecting X as a return, right? Call it whatever, call it 5% in dollars at best, assuming it's a Philippines sort of environment, right? Some places, of course, the argument is that actually will charge you negative interest rates if you put money with us, right? So that was actually my other question in terms of that being a challenge. What I've seen is, in most of the African digital banks, apart from Kuda Bank that has raised serious cash, the others are basically like sort of trudging along. And I think some of them will not survive the next 2 years because, one, they don't own the tech. But second one is, your teacher, you need to tell me, in your own view, do you think they should in-house the tech, or do you think they should outsource? Because I think that has been the other question, that within the industry, it's been a very difficult conversation. Where who do I back? Do I back a team that's lean and mean and they have agility and they're able to like outsource their tech problems to your teacher? Or do I go for Greg and say, you have the tech, you have everything, you have your MVP, you have $70 million and you're already in the market? So essentially, have to decide who do I back in the cost. So that's, sort of some of forward-looking decisions that we have to make, essentially.
Yeah, thank you, Japheth. Happy to take those. So the question of, why deposits and how do people survive? I agree with you. Most neobanks out there will not survive. The reason for that is that they're spending too much customer acquisition cost on the customers that provide very, very little monetization through the payments monetization that they've developed, right? So the current account in traditional retail banking, in most markets, it's a loss leader. It always has been a loss leader. And from my point of view, always will be a loss leader. not charging anything for it like these neobank guys do, like doesn't make it less of a loss leader, makes it more of a loss leader. So you better have a good idea of how the hell you're going to monetize those customers. And it's not very obvious how a current account customer translates into a loan customer or a deposit customer or a wealth management customer. You really need to work at that because it's most of the time, it's a very different proposition than payments. If you've attracted the customer for payments, doesn't mean he's going to give you his deposits or take a loan from you. Not at all. Now, where most of the money is in retail banking is loans. It's lending to consumers, making interest rate. To make that interest rate, you need to have savings products that finance that loan book. Okay, so for me, I'm starting with deposits, and those deposits right now are negative carry on my balance sheet because I'm not earning back the deposit interest rate on Treasury, but I've built up a stock that gives me the confidence, okay, I can now go and launch and very rapidly grow my loan book as well. And over time, you equalize and you grow equally the assets and the liabilities so that they're matched, right? So that's to me a normal strategy of how you build a bank, whether neobank, not neobank. Now, a lot of the guys that are doing neobanks around the world, they haven't actually been bankers before. So that's, that gives them a different perspective. So a lot of them come at it from like a technology perspective. Now, a lot of the technology companies, like the main modus operandi for a technology company these days, you go out, you get a ton of users, how quickly can you get to 1 million users? And then you try to figure out what to do with them, right? So that's just like, it goes totally against the grain for me, Japheth, I'm with you, man, because like my first 10 years, I was leveraged buyouts guy, right? So I was like doing LBOs where you make a business plan where over 5 years, you optimize your EBITDA from 13.2 to 14.7. And that's how you make your money, right? So like, that's, saying, okay, let's go and spend 20 million bucks acquiring customers that we don't really know what to do with. I just don't get it, and like, to me, that's a crazy risk that I wouldn't be prepared to take. I'm a lot more risk averse than that as a person and as a business person. So that's a different way of looking at things. Kuda Bank, you mentioned, one, like I was very impressed with their valuation as well when I saw the news. I, remain, to see like how they're actually going to justify that in terms of making money for anybody, right? Because like you need to have revenue out of it. That revenue, it needs to come from loans, whether you like it or not, it needs to come from loans. And loans, that tech stack that you mentioned, like that to me is a simpler decision because actually most of the tech that you need to build an in-cloud bank, it's out there. You don't need to reinvent it. Our core is Finastra, one of the top 3 core banking providers globally. Our card processing is BPC, one of the top 10, card processors globally, et cetera, et cetera. We have about 20 vendor positions. And on each vendor position, we have a top 10 global vendor. But the stuff that is critical to delivering value, like that we insource. So for example, for the credit process, credit decision-making, the engine for the decision-making, we're insourcing from a company called Krif, which is again, one of the global leaders in the decision engine. We also have some vendors that help us in getting alternative data sources for making credit decisions, scraping the device data, telco data, et cetera, et cetera. But the actual engine that translates that into a good credit decision, that's our critical know-how. And I wouldn't dare to outsource it to anybody, right? Because that's what that magical juice in my business that I really need to know. But the stuff that's core banking or card processing, et cetera, like that's to me is fairly commoditized, and there's people out there who do that really well. I don't need to reinvent that. So that's, I hope that helps address, Japheth, the question you were asking.
Thanks, Greg. That was really amazing. You have really explained in detail, and I think it gave us a new way of looking the investment part, how we are seeing the neo-digital banks and journey. Like, I know I was still trying to understand, how they are different from digital, and I think this really helps us a lot. Thank you. So, Mr. Munywoki, Africa has made great strides recently in fulfilling its dream of becoming a launchpad for innovative high-tech companies. From 2015 through 2020, the number of African tech startups receiving financial backing grew at a 46% annually, some 6 times faster than the global average. According to the venture capital firm that was Patek Partners, they have released that, how established firms can help the region's innovators to scale up.
Look, what I've seen is this. One is we've had what you call corporate VCs, where essentially you'll find African corporates having in-house VC entities. And one of them is like Naspers, which already has shareholding in Tencent in China, and their own process as well. So essentially, that has been a big driver in terms of tech, but they also invest in tech that is within their own ecosystem. So we've seen the same with your Vodacoms, we've seen the same with your MTNs, and essentially it's going to grow like that in my view, in that everyone wants to enable businesses within their own supply chains. The early sort of players went in within fintech, because essentially, like Greg was saying, that's where a lot of interest has been. The tech has been out there. And in fintech, for example, I think we had a conversation, I think that was earlier in the week, where 54% has actually been on fintech. So we've not seen a lot in agri-tech, which I think is where we need to like focus on right now because of food security issues, post-pandemic challenges in terms of nutrition, body immunities, and the rest of it, because that's where I think we need to move to. But we've seen the same in health tech, so we've seen quite a lot. But the key concern that I've had all along was what happens to job losses, what happens to traditional sort of industries like tourism, what happens to reskilling people who are in this sort of spaces and they don't have skills of the future, so to speak. So essentially, that's where the question has been. But I still come back to my question to you, which was, do you think we need to look to in-house tech, or do you think we need to outsource to AIT Global, for example?
I would say that's a very interesting question. But there are so many parameters that needs to be looked at. One is the investment. One is the where we are in terms of skill set that you have very nicely mentioned, whether it's AIT or any other organizations. So what their previous experience has been in that domain, how they have performed in that particular sector, or when it comes to as a tonic, what APIs or how developed they are, how secure their application is, because security is a very major concern. We have seen, especially during pandemic, we all are working from home. There are multiple challenges coming from maybe from the VPN network, or maybe the connectivity issues, maybe the applications that we are using. We have one desktop and we are using multiple applications. So there are multiple things I think that needs to be taken care of. For that, we need another session to get into this detail. Yeah.
The reason I was asking was this, maybe Greg can jump in here, because we don't have 5 years in Africa to basically sort of start skilling people. And then that person comes in and does a very basic thing, which basically can be outsourced tomorrow. And then the products can be in the market. Because remember, there's always that time lag effect. There's always someone who has better technology. By the time you skill that person, 5 years from now, there is new tech, there's new ways of doing things. And then now you have to skill him at that stage. And this comes from a standpoint of what we've seen. Like, for example, Rwanda has spent $400 million building the Kigali Innovation Center, right? But 400 million on an innovation city, as opposed to where we're saying, okay, what do we manage here? Is it the skills of the future that we need, and what can we do now in terms of outsourcing as we try upskill? Because it has to be sort of a strategy that involves multiple approaches. So essentially, maybe Greg, you can jump in and just share your thoughts on that.
Well, happy to, Japheth. Uh, we're a bit of a unique animal in that our starting point is the world is our playground. We were built after the beginning of the pandemic, when we were all locked down. So we have now get close to 300 employees. I've personally met only about 30 of them, like 10%. Everybody else we onboarded remotely. We're working with them remotely. Half of my management board I haven't met face to face, only on the screen. So it's very strange time, but like it creates new habits and new approaches. And for us, from day one, we said, okay, the skill set to build what we're building just doesn't exist in the Philippines. It's not there. So, my CTO is Indian. My chief risk officer is Indian. We have a development R&D center in Chennai, which is like half of my headcount. Actually, a little more than half is there. That's of our global headcount. Then some of the key architecture guys from the technical perspective, they're based in Singapore, because that's kind of where, it's the hub for banking, digital IT in the region. So the best guys, they tend to get hunted from India to come to Singapore. And there's like, these massive buildings out by Changi Airport where all these guys like hang out. So that's the approach we've taken. UX, for example, is impossible anywhere in Southeast Asia or even South Asia. Like super hard to find good people for UX at normal price point. They're just super expensive, the ones that like know anything. So we said, okay, for our UX, we actually went to Eastern Europe, and we have a mini hub for UX in Ukraine, where we have a few UXers there, and people working remotely, right? Because everybody's working remotely. So, that's the kind of thinking that I think the lockdowns are creating as more of a habit. But I would encourage, to the extent that you're working with your companies and looking for the technical expertise, we've completely moved away from this kind of in-country thinking to a very global playing field. Everybody's just a face on the screen, so I don't care where you are, as long as you do your job. My deposit product manager is based in Jakarta. He hasn't managed to go to Manila since we started 2 years ago. And, I don't know if he's tall, if he is, short. I don't know what color his pants are because I've never seen him. Like that's kind of the way the world is these days.
This is crazy time, Greg. This is
it is crazy time. It is
Yeah.
crazy time. But like it just like, but it forces you into a different mode of thinking, which I think in the long term is a good one. It's really good because it breaks those international boundaries and just like gets you the best resource from wherever they are. I mean, another crazy thing I've done, guys, is I'm in Singapore, right? And it's really hard to like go out of Singapore, and really expensive to have a personal trainer here. So a few weeks back, I was like, hey, I know all these guys all over the place in some low cost countries. Maybe I can like put a word out. I found a guy in KL, great price point. Every morning he's working out with me, right? And he's like, watching what I'm doing. We're on Zoom, right? So the downside is I have to change the weights on my, like gym stuff myself, like.
We are self-dependent now, more and more. We know.
Yeah, but the guy's like super competent at what he does, and he's like, a magnitude of order like cheaper than a Singapore trainer, right? So it's all these professions and kind of things going online now that haven't done before, but I think for the long term it's good, right?
I was actually reading one article recently. The major disruptors, they, according to Harvard, they were like mostly unplanned meetings, unplanned connects, and then food delivery, some kind of maybe Amazon delivery coming in. These are the major distractors in last 2 years. That is completely different what we would have thought about 2 years back. So, Mr. Munywoki, on a lighter note, how do you think that has impacted as investors? Because the things has been a little different. Like you started looking at the industries differently. There was a increase in tech expenditure, investment. and health investment, it has increased tremendously in last 2 years. So how do you see that has impacted the mind frame of investors?
Interestingly, before, what we used to do was we will do DCF models that, you have a 30-year forecast, then you discount it to present day and say valuation is X. And now all of a sudden, you have to start looking at innovation. You need to look at how innovative is that business. You need to also start looking at how entrepreneurial is the management of that business. So essentially, it's become not a game of numbers anymore. It's all about a game of who's coming in to change the game, who's coming in to make massive revenues just because they're early sort of players into that space. Because before, you could find someone who basically says, we're so good at what we do, we've been doing this for 50 years. The next thing, Amazon comes in, then they're obliterated. So essentially, we've seen that already. And it's gotten to a point where, now you're worried with traditional banks, for example, to go back to Greg's conversation, with neobanks, because essentially they will basically obliterate a lot of the old sort of established banks, because innovation will take time. By the time they even discuss it in a board meeting that meets quarterly, what has happened in those 3 months is that a new player has come in, taken a quarter of the market size, for example. So essentially, we've seen quite a lot of that. Now, on the VC space, we've seen very strange activity. When I say strange activity, I'm saying people are putting in money even on pre-seed conversations, right? So I think it was AutoCheck Africa, where on pre-seed last week, it was, I think, $3.4 million. And that was a pre-seed conversation. Before, we used to get a seed conversation at $500,000, right? And that's a total check size that you're getting. And some of the seed sort of conversations, most of the players were doing $10,000, $20,000, $25,000, right? So now we're getting to that level where, pre-seed is getting to that stage where it's between $1 million to $5 million. Now you will expect that seed will be higher than that. And then you now look at Africa in terms of, sort of population size, right? Then you can see what that means for us as a continent. Biggest concern is regulation and country laws. And of course, everyone is trying to learn as we go along. But then, we need to figure out how do we manage not to have prohibited sort of taxations and, of course, regulation issues in terms of compliance, because some places you need several licenses to run a small thing like a food delivery service, right? So you need to sort of balance that out. But all I'm saying is now we're looking at innovation. We're looking at entrepreneurship. We're not looking at your, 5 years historicals and then project that over the next 30 years, because the next 30 years, God knows where that number will be, because, in 2 years from now, there'll be a new player that comes in and disrupts the industry totally. And with this working from home sort of culture, there's a lot of things that are happening, changing. And by the time we realize, we'll come out from the pandemic, and some businesses will be actually in the middle of a pandemic themselves, because they won't realize what changed within that period of a pandemic. So we've seen a lot happening and changing.
So, Munywoki, you are absolutely correct. Even I was reading one of the column when we find out or calculate the return of interest, especially when we are talking about any technology that is 3 years, how much return we are getting in, because every 3 years or 2 years, technology is changing. So we need that return at least in those projections next 2 to 3 years, because we know there might be compliance change, there might be updates happening. There might be many things that can change based on the way the digital wave is going on. So what do you think would be next, I would say, the opportunities for or challenges of digital transformation?
Look, I think, like I said before, my biggest concern has always been, do we insource or outsource?
Yeah.
So as a continent, we need to ask ourselves, do we insource or do we outsource? If we need to insource, then basically that means we need to upskill. Now, the conversation goes back to even something that we had about coders and the rest of it. And someone was saying we needed to have coders, entry-level coders in the region of $5,000 and whatnot. And they said the biggest hub of coders in Africa was in Cape Town. But even the basic operations of that needed at least 600 coders within one particular bank that I won't mention. But that bank did not have enough in-country resource. They had to basically do like what Greg has done and chosen different paths and decided this people will come from this jurisdiction because I can find that resource. So that will be a major challenge for us. I think now with a lot of online stuff going on, I think we might get to a point where there is a giant leap. But then essentially what that means, for a giant leap to happen, then you need to have certain conversations where you basically say, listen, we will put you on a lockdown sort of agreement with us for the next 5 years. Wherever you're placed, we take, let's say, 20% of your salary, we recover whatever cost of our training, something like that, so to speak. So essentially, I think that's where, might be a game changer for us. But I promise you, we basically need to upskill totally. It has to come as quick as possible. What needs to be done urgently and is important, then basically we need to like figure out how do we outsource that, get it done now. We can't wait or keep on doing what we've been doing all along because things have to change essentially.
Thanks, Mr. Munywoki. We have questions coming in. Do you think we can take those right now? And this is for
Absolutely.
both of you. What has changed and not changed for leaders, especially after pandemic?
Happy to
You're
take
saying
it
what
back.
has changed?
And not changed for leaders after pandemic.
Yeah, happy to take a crack if you want. What has changed is the how you lead in the absence of physical contact. That's a very, very big challenge. As I told you guys, we built the whole team remotely. And what that means is we're not able to integrate teams in the same way that we were able to do in the past. So that human element where people are feeling each other, feeling how to work with each other, that is missing unless you proactively like invest in that and try to recreate it in this digital face on the screen environment. So we've been putting a lot of effort into that. And this is a big hurdle for innovation, because whenever you innovate, you need to have two vectors. There's a conflict vector and there's a cooperation vector, and you need to have both of those working. Now, the face on the screen environment, when people have not integrated properly, don't relate to each other on a personal level, it's too easy to overweight the conflict vector. And we've actually seen that happen a lot. So I've had to actually step in and arbitrate between my top managers a lot more than I would have, in my previous situations where it was live management, where, normal situation, you have a new team, every couple of weeks you take them out, you go do things together, whether it's karaoke or sailing or whatever it might be. You create that human contact and that bonding and that team spirit. And that's been super hard to do. So that's probably my biggest challenge as a leader these days, is to try and do that. And you try to overcome. We do our weekly water coolers and happy hours and yoga classes, and we got tons of stuff going on, right? But it's not the same. It's not the same. But what stayed the same is people are still people, right? And you still, like, at the end of the day, as a leader, all you're doing is trying to align people towards an objective. So it doesn't matter if it's the army or a bank or a manufacturing company or an IT company. It doesn't really matter. You're working with people, and you have a group of stakeholders all around. There's people who are shareholders, there's people who are employees, there's people who are customers, and you just try to work with these people to create something that makes sense for everybody and moves you towards some objective that you've set for yourself. So that doesn't change fundamentally. I don't think leadership has gone through, this incredible transformation because of the COVID environment. But how you lead has to be different. And you have to be more proactive about creating those bonding elements.
Mr. Munywoki, same question.
Interesting. I think what has not changed is that as a leader, you still must be the bearer of the vision. You need to be also the person that comes up with the vision. You need to be the person that articulates the vision. And also it depends on the space that you're in. I think now with, your new sort of employee, your new sort of worker, there's more knowledge workers than before. So essentially what motivates them is different. So they need that intellectual stimulation. You need to be able to show them how the business has transformed through a pandemic, and it's gonna go through this pandemic and come out better, right? So essentially, you need to manage that sort of process from a conversation standpoint. What has changed, I think, is the way you manage loyalty, the way you manage motivation, the way you manage team management. Before, in terms of team management, you can walk down a corridor and everyone knows your footsteps because you're the boss. And they're able to no, now at this point, he's coming down, so we need to look busy. But team management now is different because, sitting here, I can't tell whether Greg is having coffee or he's having a glass of wine, just in a team. But so essentially, team management has sort of changed from that standpoint. So one is what I saw that was interesting. I think that was last week. Some companies have now invented technology to tell if that person who's working remotely, whether they're actually working on work-related stuff or they just have a screen that's just open and they're looking busy. So essentially, now positives are, I've noticed some people are actually working longer and they're happier in those environments. And two, we need to agree that, some of the positives was there was a lot of time wasted commuting to and from work. So that is a huge sort of factor to consider in terms of what's the input in terms of time that goes into company time and productivity in an organizational sort of setup. But so essentially just things like loyalty, motivation, because remember we were big on lunches on Fridays, big on conversations that are informal, once in a month to just sort of understand where everyone is at and the rest of it. But also what has changed as well is, like for us, we have exposure in different countries, 8 of them in the continent. Travel has also been impacted. So essentially, that sort of changes how you manage things. So there's a bit more in terms of trust, a bit more in terms of what needs to be happening and in terms of engagement as well. So yeah, so that has changed a bit.
Thank you, Mr. Munywoki. Thanks, Greg. Any final words for our viewers?
I'll let Greg go first.
Yeah, I think since it's a leadership summit, I would say, the last phrase that, like the last piece had to do with managing people and leading people. Leadership is a function of people. It's a human thing. So I wish everybody to, fulfill that function with compassion and humility, because that's what ultimately will, make us happier and make the environment that we're in happier and more harmonious. So, in these tough times, it's easy to forget that, but I just wanted to kind of put it out there as a reminder, and, also helps by creating yourself a good karma. But at the end of the day, like, we're here for a finite period of time in this incarnation. So let's make it a pleasant one.
Thank you, Greg. Mr. Munywoki?
I think in my view, I think it's a combination of two leadership styles. One is servant leadership, in that leadership is more or being a servant leader as opposed to being the master.
Yeah.
I think that's where we're going towards leadership in the future, in terms of where we need to go. And secondly, I also believe a leader must be able to transform whatever he's found or whatever he's envisaged. So essentially, what that means for us is, in terms of transformation, we need to basically make sure that there's a lot of stuff that's futuristic in terms of thinking, and there's a lot of stuff that we need to do so that by the time we're done with this, we've left a legacy, we've left a mark, we've basically like changed a whole entire spectrum in terms of thinking and the way of doing things. So that has always been our challenge on a daily basis, in terms of what can we do differently? What should we be doing that no one else has thought of doing? And it's sort of bordering on being mavericks, but essentially within limits of responsibility. So essentially for me, I believe leadership has to be visionary, leadership has to be servant leadership. You need to be able to look at transformation in the process.
Thank you, Greg and Japheth. That is a great final word for our terrific session. Thank you, our audiences, for joining us today.
Thanks, Yotisha, for the invite as well. Thanks, Greg.
Thank you.
Cheers, everyone.
Cheers.
Cheers.
Nice to meet you. Thank you.